You can follow me at Gumby9662C. Evening video. Like the video if you like it, and make comments if you can at the bottom of the YouTube video. I'd really appreciate it. I'd like your feedback. Now, what's a little concerning here, if XLF can't catch additional bids here, we could actually be putting in a topping pattern on our financials. I had mentioned before, this is a primary channel we had been in for a very long time, and we broke down back in 2015 out of that channel, and we came back up here. We're testing the channel, and we looked into it right here on the weekly basis, but we're running out of time. If we cannot get additional momentum here in the financials, it looks like we're going to fail out of this channel via time. It's not via price action, it's via time. So just keep this as a warning that I'm beginning to think we're not going to get back into that primary channel based on the price action in the markets. Interest rates after the ADP report held up really good today. We're almost guaranteed a rate hike in March, and likely right now, unless the markets start to really sell off, at least 1 or 2 more rate hikes this year. So things are looking good on the rate front. Everybody and their brother are short bonds right now, and we had a breakdown from the Bear Flag today. And initially it was way down, came up, and then it sold back off at the end of the day on the bonds. But we still have not even we haven't even tested the primary trend support yet. So I do see more downside pressure into the rate hike sometime this month. We also saw a breakdown in the high yield bonds today. Okay, and these have been catching a bid along with oil, and oil just fell apart today, the oil industry. And a lot of these high yield bonds are held by oil companies. So we are testing the uptrend support right now, and once this high yield bond starts to break down, that's even going to give increased pressure to the downside in the oil industry. Crude just got decimated today. This was the single biggest move in a year for crude, intraday move. It broke this trend line and it just crashed down into the cloud, and there is some reference support here on your cloud, so we could get a responsive pop tomorrow in crude. And I'm actually looking for that a relief rally in crude tomorrow. Your XLE, your energy sector, it clearly broke the 200-day moving average today on volume. It was terrific carnage in the energy space today. And XOP was the leading indicator yesterday. It broke the 200-day, closed below the 200-day yesterday, and today it broke the uptrend with it just didn't even look back. It was just outright carnage in the energy space. Another area, and we had that real good news from the ADP. IWM should have been leading the markets instead of lagging the markets today. And it came down, and we have broken into this prior channel that we were in. And the cloud has acted as support for quite a while now. And I'm expecting IWM to open lower tomorrow and get some responsive buying tomorrow morning. So we'll see what happens. Especially, we had the jobs numbers coming out Friday, so I don't think there's going to be a lot of shorts put on in the markets tomorrow. This was probably a dip buying opportunity for many investors. I'm keeping on watch the XLI. I'm thinking next week this primary uptrend in the industrials, it's going to break trend and put increased pressure for the downside in the markets. So I'm going to watch this going into Friday close, because I'm going to want some short exposure going into Monday next week. We caught a relief rally in the retail XRT, and that was helping drive our consumer discretionary today. But it's nothing that I'm really that I'm not going to read a whole lot into it. I'm thinking consumer discretionary will be the next major sector to break trend, in my opinion. Now, your transports came down. They're closing. It closed right on near the cloud and on your 50-day moving average. This is typically what you would consider a bounce point for your transports. So even though that I'm a little bearish on the markets here, and I'm just a little still. We had a little bit of action today. You know, the primary trend in your transports is still up. Okay, so I don't want you guys to get overly bearish here, thinking the markets are just going to fall apart, because I don't think that's the case. Not yet. Even your airlines are still solidly intact on your trend lines and everything. So, and you're still above the 50-day moving average. So, don't panic too much yet. Now, an area which I do think is breaking down here, and this was a Trump rally area, and that's your materials area. Okay, basic materials, your coppers, your coals, your aluminums, your steels. I mean, all of these are getting some pressure in the markets here. So just keep an eye on that. We're still above our 50-day moving average. It's something to put on watch. We are breaking a trend line here that I've got drawn, and the trend is still up, but there's more relative weakness in this sector versus some of the other major indices. And in that theme, SLX, your steel index, it just completely it closed below the 50-day moving average yesterday, and it just completely got destroyed today on this index. Like your Steel Dynamics, your AK Steel, they got hit really hard today. And VAL, VALE, that's a Brazilian steel company. X has some a little bit of support. U.S. Steel has a little bit of support below it, but if this continues to show weakness here or even break the cloud, I can see U.S. Steel completely falling out of favor here in the not so distant future. Something that I want to show you, a change of character in the markets on the S&P 500. The candlestick chart here, this is your RSP. This is the equal weight of the S&P 500. And for this, for a very long time now, your breadth has been outperforming the S&P 500. Well, what we're seeing right here, right now, is a slight change that our breadth is starting to drop below the S&P 500. And this is a bearish situation that we're setting up here. If you don't have the market breadth supporting price, the S&P 500 is likely to go lower. So just keep that in mind, that the breadth is coming out of the markets, at least here right now in the short term. Another area to have on concern or have on watch, our SMH, this is our semiconductor index. We have this accelerated uptrend, and next week we should be crossing over that accelerated uptrend. Now that doesn't mean that the semiconductors are going to sell off. It just means that we're going to have a trend change, which if the rest of the market sell off could be not so good for the semiconductors too. So if we see a little bit of weakness in the markets, and this being so overly extended, it would not take much. You see how close we are to this trend line. You know, the first of next week, we could actually see some responsive selling in the semiconductors too. Now, like I said, this is the strongest sector. So, the fact that it's trading right next to the trend line and getting ever so closer with smaller candles, that's something to be concerned about. And one last chart that I want you guys to take notice of. I drew my trend line a little bit different. The reason I did that, the last time we dropped below that trend line, we got a little bit higher volatility in our technology. XLK, the technologies tended to pick up once we dropped below that trend line. And we are dojing out right on that trend line right here at a reference fib area that should see some responsive selling. So I want to. This is the 161.8% fib zone for the Qs. So I do want, or the NDX. So we should see some responsive selling if the markets do sell off. That's all I got to say. And I don't want to be too overly bearish, but there are reasons to be bearish. Thanks a lot.